As you're all very much aware, we've shifted into a more unpredictable, more volatile, and more uncertain economic and financial market cycle. Since mid-February, the stock market experienced a 20% correction to its trough on April 8th. It has since partially recovered, but the VIX is still elevated, suggesting continued volatility. At the same time, the bond market is also behaving abnormally. Typically, when the stock market falls and money makes a flight to safety, bond prices go up and Treasury yields fall. And that started to happen after the Liberation Day tariffs were announced, but then demand for bonds eroded and Treasury rates went up. Experts have indicated that this, together with the fall in the value of the dollar, suggests that international investors may be shying away from U.S. investments. So where does capital go when both the stock market and the bond market are simultaneously volatile? Especially as recession and inflation risks are rising. Gold is viewed as a safe haven. Since April 7th, the price of gold has climbed by more than 11%. Others are saying crypto is the place to be. Since April 7th, Bitcoin has gone up by about 10%. And then there's the other hard asset. Traditionally, during times of volatility and uncertainty, hard assets like commercial real estate have been viewed as a good investment option. But each type of investor will likely behave differently this cycle. Over the last 15 years, direct international investment has comprised about 11% of the total buyer activity on average. In the current climate, assuming experts are correct and international investment in the U.S. is tapering, fewer foreign investors may be at the table to acquire U.S. commercial real estate. Historically, REITs have made up about 13% of the buyer pool, but their activity often aligns with their stock valuations, and REIT stock prices have been impacted by the recent stock market volatility. The next biggest investor in real estate is institutional capital, which has made up about 26% of the buyer pool on average. But two things will likely hold back institutional investment activity in the current climate. First, they tend to be cautious during times of volatility. And second, they have target portfolio allocations, with a certain percentage of their capital going into the stock market, a percentage going into the bond market, and a designated percentage going into real estate. But when portions of their portfolio gain or lose value, they typically rebalance the assets to move back to their targets. We've seen this before when the financial markets fell. The loss of value in the stock and bond portions of the portfolios could force some institutions to rebalance the composition of their assets, pushing them to sell some commercial real estate to get the percentages back into alignment. Now, most institutions probably aren't at that point today. More likely, they're taking a wait and see approach. But if the current climate of uncertainty and financial market volatility leads to a sustained weakening of the stock and bond markets, some institutions may rebalance their portfolios. Then there's the last group of investors, the private investors, which have historically made up about 46% of the buyer pool. This group tends to behave very differently than institutions. During times of uncertainty, private investors make up a larger portion of the buyer pool. In 2020 and 2021, during the pandemic, private investors made up 52% of the commercial real estate buyer activity. That figure climbed to 59% in 2022 and 61% in 2023 as interest rates rose. Even when you look at the more institutional segment of the market, sales over $20 million, private investors made up 51% of the buyers in 2022 compared to the institutional share of 31% that year. Interestingly, I was looking at the average private investor commercial real estate deal price as reported by Real Capital Analytics. Overall, the average private investor deal over the last 5 years has been about $12 million. For retail, it's lower, about $8 million, because private investors buy so many single-tenant retail properties, which tend to trade at a lower price. The average private investor deal price for industrial properties is about $8.7 million, and for office properties, it's about $11 million. But for apartment properties, the average private investor deal is about $19 million. I suspect that average has been driven up over the last several years by syndicators and private equity funds. So, in a climate of uncertainty and financial market volatility like we currently face, I suspect private investors will be the most active buyers in the market. Of course, commercial real estate will undoubtedly face challenges in the coming year, especially if there's a recession. But real estate prices have recalibrated since 2022, and the combination of positive demographics and falling construction levels position this sector to strengthen over the long term. As always, investors need to keep their eyes on the horizon.